Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look today again at the Japanese yen, since the situation gradually is changing here, and we now stand at the support on the weekly time frame that is also in agreement with this minor target of the 618 extension of that ABCD pattern. So market has hit the minor target 618 extension and simultaneously has hit the oversold condition on the daily time frame. So you can see within the two trading sessions market is showing some minor bounce from this support area, and major question now whether it's just retracement after they hitting the target, the market will proceed lower. So if we'll shift to the weekly time frame, will it proceed to the 100%? That is stands approximately around the 50% support area, or market will start our bread and butter trade with the target around 100 even, right from this level, because this level is also very suitable for starting move. This low stand just 10 pips higher than the major trade support at the deep oversold on the weekly time frame and the oversold on the daily time frame, and at agreement with the 618 target. That's very suitable condition for starting of the Napoli brand butter buy. That is possible, and we need to understand what to watch for to make the correct understanding of the, is it really starting move to the upside, or is just a retracement and we will expect the further downward continuation. Also, that is important that this is the third week below the 3x3 moving average, and that in fact by the theoretical approach, the last week when the after which the bread butter trade should start. It should start earlier after the second of course, but that is the last one. So if market will, for instance, will show a move to the downside, that will be the ultimate level where it could start. Because if it market will continue move lower, which is a bit not very probable, that will be in fact, as I said, the ultimate level by the end of this week. But also this trade could start from this level as well. That's why I offer you to take a look on the intraday charts on the daily time frame. Depending what we will see there, we probably will understand what levels to watch for, what particularly to monitor within the today and tomorrow trading sessions to make the current decision about whether market will start move up or it will continue move lower. Well, sorry, on the daily time frame. On the daily time frame, in fact, we do not see anything interesting, just this small bounce to the upside right from the major support area. On the 4-hour time frame, what do we see? On the 4-hour time frame, in fact, we have reasons to think that this move could start from that level, because we have the reversal pattern here, it's the butterfly buy. Also, if you remember, in our weekly research we have suggested that this also could be the butterfly, but market has failed with it. And recall that 1618 of our potential minor butterfly of this butterfly stands at the same area where stands the 1618 of this greater butterfly, but market has failed to form this smaller pattern and turned to triangle consolidation that has been broken to the upside. That is a relatively bullish sign, although the breakout is not impressive. But after this huge solid move down, it's very difficult to expect some thrusting acceleration in the opposite direction. Any big thing usually starts from the some shallow action. It's usually some consolidation and then market trying to accelerate to the upside. Now, as you can see, based on this chart, our major area to watch for during today's trading session is this upper border of this triangle. If market will fail to hold above it and turn to the downside, will return right back below this level, this will probably mean that market will proceed lower, because triangle itself is the continuation pattern, and if market suddenly has shown the breakout in opposite direction, it should follow to this. But if it will not do that and return right back below it, and return right back in the body of this triangle, that will be the bearish sign. And in this case, we will have to ready for downward action. So keep in mind this moment. This will be important on the hourly time frame. On the hourly time frame, see a bit more sophisticated picture, but do not be scared. That's some nuances that we need to understand what to expect. First of all, take a look at this blue line. That is the weekly pivot point. Market has tested yesterday and now stands below it. So you can see, in fact, action now stands in the area between the upper border of the triangle and weekly pivot point. Also take a look, that is the natural support resistance line on current weakness. Support, resistance, now it's again resistance. So what we need to see in the nearest hours? We need to see how this retracement down will develop, since you can see that that could be, if market is really bullish and intends to start move to the upside, that could be just a retesting of this broken line from the opposite side. So I would like to see here ABCD retracement right to this area. That will be also the confluence support on the hourly time frame, 94, 84, 95, even approximately. Now you can see market is approaching here currently. That is our chance to take the long position, because if we will right, the market probably should turn to the upside from that area. If we will wrong, then probably market will break this area to the downside and return right back below this low. Our stop should be placed below this swing low, because that will be the Fib support area, major 618 support from the whole move up. Okay, and if market will erase whole this move, return right back below, that will be obvious that it's not the bullish action. That is not big about the 40 pips stop. It's reasonable concern if we will compare it with the target that stands around 100 even, slightly lower than 100 even. Well, you can see tremendous risk reward, but that is the risk that we probably will have to take if we would like to possess ourselves on the long side of the market. But that is a bit aggressive tactic. So if you would like more, to get more confirmation, more confidence with the upward action, then probably you should wait the breakout of this area. So if market, for instance, will hold there, turn to the upside and break above the weekly pivot point, that is a conservative way to enter. So that will be much safer, since you will be able to enter after this some sloppy action, with small retracement when the directional move will start already. That will be safer way to enter, but that will give you worse price to enter. So decide how you will deal with this particular situation. Probably you could choose some combined approach. For instance, take here some small position and wait for further clarification. If market will really turn to the upside, will show some impulse move to the upside, start to accelerate to the upside, well, you could add more on some shallow retracement that will happen later. But if market will fail, well, your risk will be very small. So that's the plan how we could deal with the current situation in the Japanese yen. Also, guys, I have read today the Reuters poll concerning the Fed Reserve, and most analysts think that there will be no clarification, significant changes in rhetoric concerning the quantitative easing program. They think that the Fed will continue to buy out the $85 billion monthly, but the major attention of the investors will attract by speech concerning inflation. And then if Fed Reserve will change its assessment of inflation in the country, that will really could impact on the market. If there will be no assessment, no changing in the speech concerning inflation, then probably the Fed Reserve speech will just flat and will have no significant impact. Because at the moment that the data in the United States is improving and the labor market also shows the acceptable and reasonable growth, well, moderate growth, that is well-known fact, and everybody knows that sooner or later the Fed Reserve can turn to the closing of the quantitative easing program. But the major warnings currently is inflation. And since the inflation is anemic and data shows that the inflation is far below the 2% of that Federal Reserve would like to see in the economy, that will be the major concern in this speech. So let's see what will they said, what will say the Federal Reserve today, and let's keep an eye on the current situation because it's really interesting. That is, in fact, what I think concerning the Japanese yen, and that is the trading plan that I would like to follow. I will follow in the current trading session.